Hey everyone, welcome to the channel. Today we are diving into one of the most iconic books in the world of investing, One Upon Wall Street by Peter Lynch. Lynch is considered one of the greatest fund managers of all time, and in this book he explains how everyday people can actually spot great investments long before the professionals do. I've put together the most important lessons from the book, so let's get into it. First of all, don't waste your time trying to predict the economy. Peter Lynch makes it clear. There are thousands of professional economists out there, and most of them still get it wrong. Nobody gets rich by forecasting what the economy will do next. So instead of guessing the market's next move, focus on finding great companies. And that leads to his next big idea. Look for investment opportunities in your everyday life. Great businesses are all around you, at work, in the stores you visit, or even in casual conversations with friends. If you stay observant, you might spot a company with huge potential before the Wall Street does. The same goes for when you travel. Every city and every country has its own unique trends. When you're abroad, pay attention to what's popular and what people are buying, or how the local entrepreneurs are building their wealth. Those insights can give you ideas that others might miss. Another key takeaway: you don't need to limit yourself to just a few stocks to beat the market. Peter Lynch's own fund once held over 1,500 companies, and he still outperformed the market. The point is, diversification doesn't stop you from winning, as long as you understand what you're buying. Be careful with cyclical companies, those that rise and fall depending on the economy. Many of them, like car manufacturers, might not seem cyclical at the first glance, but they are. Always study the industry dynamics before investing, or you might buy at the wrong time. Another timeless lesson: don't chase hard stocks. If everyone already is talking about them, you are probably too late. The best investments are often the ones nobody paying attention to yet. Also be cautious with companies that depend heavily on just one or two customers. If losing a single client would be catastrophic, that's a major red flag. And don't stress about predicting exact earnings. What really matters is whether the company has a clear long-term plan to grow profits, and whether they're actually executing on that plan over time. Lynch also reminds us that not every investment needs to succeed. If 6 out of 10 of your picks work out, that's enough to build an incredible track record. The key is to keep learning and to hold on to the winners. And finally, keep things simple. The simpler the business, the better. Lynch famously said that if even an idiot could run a company, that's actually a good thing, because sooner or later, one probably will. To wrap it up, One Upon Wall Street teaches us that successful investing isn't about complicated analysis or economic predictions. It's about curiosity, common sense, and paying attention to the world around you. If you keep your eyes open and think long term, you can find amazing opportunities, sometimes right in front of you. If you enjoyed the summary, hit that like button and let me know in the comments which of the lessons resonated with you most. And if you want more book breakdowns and investing insights like this, don't forget to subscribe. Thanks for watching and see you in the next video.